Ever feel like your student loan payments are a never-ending maze, with interest rates and terms that just don't quite fit your life anymore? You're not alone. Millions of people grapple with the weight of student debt, both federal and private. And that brings us to a crucial question. Can you actually hit the reset button on those loans by refinancing, specifically with a platform like LendKey? Think about it. You might have federal loans with their unique benefits, like income-driven repayment plans and potential loan forgiveness programs. On the other hand, your private loans might have variable interest rates that keep you up at night, or repayment terms that stretch out for decades. The idea of simplifying these into a single, more manageable loan with potentially better terms is incredibly appealing. But the world of student loan refinancing can feel like navigating a dense forest. There are different lenders, eligibility requirements, and the big question of what happens to those valuable federal loan benefits if you refinance them into a private loan. So, let's cut through the confusion and dive deep into whether LendKey can be your guide in potentially refinancing both your federal and private student loans. First, let's understand what LendKey actually is. LendKey isn't a direct lender in the traditional sense. Instead, they operate as a marketplace, connecting borrowers with a network of credit unions and banks. Think of them as a matchmaker for student loan refinancing. You provide your information, and LendKey's platform shows you offers from various lenders that you might qualify for. This can save you the time and hassle of individually applying to multiple institutions. Now, to the core of the question. Can you refinance federal student loans with LendKey? The short answer is yes, absolutely. LendKey's partner lenders do offer refinancing options for federal student loans. This means you could potentially consolidate your federal direct loans, plus loans, or even Perkins loans into a single private loan through a lender on the LendKey platform. However, and this is a crucial, refinancing federal student loans into a private loan comes with significant trade-offs. When you refinance a federal loan, you lose the unique safety nets and benefits associated with federal programs. These include income-driven repayment, IDR plans. These plans adjust your monthly payment based on your income and family size. If your income drops, your payments could be significantly reduced, and after a certain period, typically 20 to 25 years, the remaining balance may be forgiven. Private loans generally don't offer such flexible repayment options. Loan forgiveness programs. Federal loans offer various forgiveness programs for borrowers working in public service loan forgiveness or PSLF, teachers, and others. Refinancing into a private loan means you would no longer be eligible for these programs. Deferment and forbearance options. Federal loans typically have more generous and clearly defined options for pausing or temporarily reducing payments during times of financial hardship, such as job loss or illness. While private lenders may offer forbearance, the terms and duration can vary significantly and might accrue interest. Borrower protections. Federal student loans come with certain borrower protections and rights that may not be available with private loans. So, while LendKey can connect you with lenders who will refinance your federal student loans, it's essential to carefully weigh the potential loss of these federal benefits against the potential advantages of refinancing, such as a lower interest rate or a more manageable monthly payment. For some individuals, especially those with stable, high incomes who don't anticipate needing these federal safety nets, the potential savings from a lower interest rate might outweigh the risks. However, for others, particularly those in public service or with uncertain income prospects, holding on to those federal benefits could be crucial. Now, let's address the second part of the question. Can you refinance private student loans with LendKey? The answer here is also a resounding yes. Refinancing private student loans is often a more straightforward decision for many borrowers. Private loans don't typically come with the same robust safety nets as federal loans, so the primary focus is often on securing better loan terms. Through LendKey, you can explore options to refinance your existing private student loans to potentially lower your interest rate. This can save you a significant amount of money over the life of the loan and reduce your monthly payments. If you initially took out a private loan with a high interest rate, especially a variable one that has since increased, refinancing to a lower fixed rate can provide more predictability and savings. Consolidate multiple private loans. If you have several private student loans with different lenders, interest rates, and payment dates, refinancing can combine them into a single loan with one monthly payment, simplifying your finances. Change your repayment term. You might be able to shorten your repayment term to pay off your loans faster and save on interest, or lengthen it to reduce your monthly payments, though this will typically mean paying more interest over the long run. The process of refinancing both federal and private loans through LendKey generally involves the following steps. Checking your eligibility. You'll typically need to meet certain criteria, such as having a good credit score, a stable income, and being a U.S. citizen or permanent resident. LendKey's platform usually allows you to check your potential eligibility without a hard credit inquiry, so you can get an idea of your options without impacting your credit score. Comparing offers. Once you provide your information, LendKey will present you with offers from various partner lenders that you might qualify for. You can compare these offers based on interest rates, both fixed and variable, repayment terms, and other fees or features. Choosing a lender and completing the application. After reviewing the offers, you select the lender and loan terms that best suit your needs and complete their application process. This will likely involve providing more detailed financial information and undergoing a credit check. Loan approval and funding. If your application is approved, the new lender will typically pay off your existing loans, and you'll then begin making payments on your new refinanced loan. In conclusion, can you refinance both federal and private student loans with LendKey? Yes, you can. LendKey provides a platform to connect with lenders who offer refinancing options for both types of student debt. However, the decision to refinance federal student loans requires careful consideration of the potential loss of valuable federal benefits. Refinancing private student loans through LendKey can be a smart move to potentially lower your interest rate, consolidate debts, and adjust your repayment terms. With that said, thanks for watching, and until next time.